Hi, today is Monday the 22nd, and this is time for the weekly recap for the current trades. Trades are doing okay, I must say, not requiring much attention. As you can see, this is the March trade, and this is a Friday's close. Now it's just about 8 o'clock in the UK, so we'll turn to market makers pricing, and the market is dropping a little, about 38.80, so I expect, even though it's not going to be visible here, I expect the market trade to show somewhere around here. But well, delta is still flattish here. There's not much to do on this trade except starting to reduce its capital usage. 19k is fine, but we're now in the descent phase. It is time to maybe build up April and also think about May coming in soon. So on this trade, I will probably do nothing except starting to reduce without losing on this profit potential here and maybe increasing a little bit of theta because, of course, I don't want to have to wait another 3 weeks to get to my more or less $800 or less 2% on Red T planned capital. I explained recently that I'm actually using PM, and if you look at PM, the margin being used is very low, very, very low, because I'm quite covered a long way down. I mean, if you look at 10%, that would be about 3,600, you see. There's not much capital being required at this time. So if I do anything, it's probably going to be something like this, just starting to reduce capital from 1916 and so on and so forth. As you can see, I wouldn't lose on potential profit. That wouldn't change much in terms of other Greeks, so that should be fine. Basically, capital usage this far down is not of any interest or any use for the trade. So nothing much to do, just planning reallocation in the next week. April is not doing bad either. And because the market has gone up from 3660 to 3960 after the GameStop saga 3 weeks ago, I decided to protect the upper expression line, but also maybe keep a little bit more negative delta without too much of a Vega impact. So this is okay. Now market makers started pricing. So I would like to see, of course, the trade being built up, maybe be a little bit more aggressive. I add combos closer to the money, especially if volatility does not go up too much. So this is maybe something I may do. I'm only using 12. If I release 3, then I can definitely add maybe 1 or 2. I've got about 6k left, so I can definitely add another 2 here. This may not look like a rhino, but this is still same basic combos, so the same Lego blocks over and over again. As time goes by, although it's going down, I would reduce the wing size, but at this, I would say at this time, 100/75 is still fine. So this is something I have in mind. As you can see, that wouldn't change anything to my Greeks really. It's just capital being added to the trade very conservatively. There's actually very little left I have to say about this. I mean, if we look at the VIX structure, it's still flattish. This is definitely not a Goldilocks scenario. Short-term volatility is fairly low, which means that whatever trouble is definitely being, I can't push down the road, but it will happen sometime. That's why this conservative with a little bit of hedge on the downside is better. This is why also I have started adding VX exposition. Maybe I've speculated a little bit too much, but I would say that if the market falls, not only my trades will do okay, but I will score a lot on VXX. Before closing, a quick look at the SPX VIX correlation. It's looking good, down to 84%, pretty good. And if I now look at the dynamics on the SPX, the volume is stabilizing around 4 billion. It's not great, but it's okay. I mean, there was a lot of selling in the GameStop saga recently, and this is maybe why the bullish momentum is running out of steam here. And if we look at daily returns, you can see that although volatility is definitely higher than pre-COVID, still it looks like it's narrowing a little. So we will watch it, and there's no real need to be of concern with a curtis of 1.5. It's been going up lately, but it's still not at a warning level. I definitely invite you to do those statistical studies as well as part of normal trading. And basically, you know that when you have a strong anti-correlation between SPX and VIX, you can then place your Vega accordingly. As far as March, it's been already hedged, but on the April trade up, I definitely entered this CCS a little bit too early before the IV convexity started forming, starting showing. But it is around 4,300 here now, so it will get better. And it will be good because the market can still go into gyrations in the next 6 or 7 weeks. But I would definitely be careful not to put too much Vega emphasis down here. Probably try and balance it all across the range. Okay, I think I've said it all. So I wish you a great week, and as usual, I will be available on Slack later on today.